With 2024 seeing a lowering of inflation, followed by lower interest rates, things started to look quite rosy for 2025. Experts and armchair gurus were busy studying data and making predictions. 2025 was starting to look like it would have the transition to stability, what we have all been waiting for. We have come around the corner. If only it was that simple, though. Things are changing, but not in the way we might have hoped. While the World Bank has made its guesstimates, they think the world economy will grow a fraction over 3%. The Fed has, however, since indicated a slower and smaller rate cut story. For 2025, Fed Chair Jay Powell remarked, "Once again we've had a year-end projection for inflation and it's kind of fallen apart. Central banks are worried." His view there will be inflationary pressures. There's also the uncertainty around the new Trump administration and financial controls, tariffs, and his influence on the war in Ukraine. In Europe, the European Central Bank has its own views. The ECB has serious concerns over a slowdown in Europe. They had planned on being sufficiently restrictive until they would meet their inflation targets, but that might all be about to change. To combat a slowdown, they might look to reduce interest rates despite not having met the inflation targets. We could be talking about significant drops in interest rates. The Bank of England, on the other hand, has its own concerns. We are starting to get a picture of things not looking so rosy now. The Bank of England is seeing signs of stagflation, with private sector pay inflation high at 5.4% and services inflation at 5%. Meeting inflation targets is looking more challenging. 2025 could subsequently see an inflationary or contractionary direction. The world economy had been expected to grow steadily in 2025, around 3.2% to 3.3%. Add the changes in sentiment from the central banks, with other global factors, for instance, conflicts around the world and pressures for investing in renewable energy. It has complicated how things get shipped around, made prices go up, and made it hard to know what will happen next. Also, many other countries are making it more expensive to borrow money to stop prices from going up too fast, but that can slow things down. Speaking of prices, globally they've been going up. Experts think they won't go up as much in 2025, but they'll still be higher than before the pandemic. The International Monetary Fund thinks prices will go up by nearly 4% in 2025, which is better than 6.8% in 2024. But getting prices to go up by only 2%, which is what many countries target, might take longer. Things like problems getting supplies, expensive energy, and people buying lots of stuff are making prices go up. Governments have to be careful about how they handle this because they don't want to hurt the economy. Different parts of the world will grow at different speeds. Rich countries like the US and Europe are expected to grow more slowly than growing countries. This is because richer countries are making it more expensive to borrow money. There are still worries about conflicts around the world. Growing countries have good chances, but also challenges, like money moving around too quickly, changing prices for things like oil, and domestic problems. The big question for 2025 is how to make the economies grow without prices going up too much. Governments have a tough job figuring this out. What they do, along with what happens with geopolitical problems around the world, will be really important for next year. The world economy, broadly speaking, is at an important point right now. The International Monetary Fund said things are slowing down in a way not seen since the big financial crisis and the worst part of the pandemic. This means everyone needs to work together to make things better. The biggest economy in the world, the US, is expected to do better than other rich countries in 2025. Analysts think it will grow by between 2 and 2.8%. This is because lots of people have jobs, people are still buying things, and businesses are investing money. But there are still problems like high prices and expensive borrowing, and possibly a recession if the government makes borrowing too expensive too quickly. Analysts see Europe having an even harder time. They might only grow by up to 1.5%. The energy problems caused by the war in Ukraine are still hurting Europe, especially Germany, which needs lots of gas from Russia. Prices are still high there, which means people can't buy as much, and that hurts the economy. The European Central Bank has a tough job trying to fix prices without hurting the economy. The US and Europe are having different experiences. The US has a strong economy inside the country and lots of energy, while Europe is dealing with the war and problems with energy prices. The UK, since it left the European Union, has its own problems like high prices, not enough workers, and not knowing what will happen with trade. What happens in the US and Europe depends on things happening all over the world, like countries getting along, the price of oil, how things get shipped, and domestic issues. The war in Ukraine has not helped either, showing how connected the world is. Leaders in the Western economies need to make tough decisions to help their economies grow in the face of the challenges ahead. Key dates to watch include job reports and economic policy meetings. These will give us clues about how the economies are doing and what might happen next. While richer countries are growing more slowly, growing countries are expected to be the main reason the world economy grows in 2025. The International Monetary Fund thinks these countries will grow by nearly 5%, much faster than the 1.4% for richer countries. This shows that the world economy is changing, with growing countries becoming more significant. China, the second biggest economy, is expected to grow by about 4.7%. That's slower than they used to grow, but it's still a big deal for the world. Some analysts view China as needing a strategy of stimulus to maintain sufficient growth. The Bank of Japan itself has conflicting concerns about imported inflation due to a weak yen and fears of Trump's tariffs slowing things down in 2025. India is expected to grow even faster, by 6.3%. India has a lot of young people, a growing middle class, and is making changes to its economy, which makes it a very important country for the world's economy. Brazil might look to focus on their football because their currency hit an all-time low in December, a 1% increase in its interest rate, while it has a large budget deficit with little capital inflows. The growth of these countries is important for everyone. It creates chances for trade, investing, and working together on new technologies. But it also creates challenges like countries competing for resources, needing to protect the environment, and making sure everyone benefits from the growth, not just a few people. Key dates to watch include major economic summits and policy changes that will shape the future of these emerging markets. Thanks for watching. Please subscribe if you are one for knowledge.